I think that the SEC regulation has always been, as Gensler said, on the table. I think that the moat here for these names is so strong that people really want to use them that, they will, I think those apps and those services will prevail. And yes, there's going to be some more regulation, but I don't see this as being something that's completely going to, change things in the industry over the long term, because there's just so much demand. There's demand for these services.
Right. So there's the regulatory picture to keep in mind. There's also the reaction from the legacy, the Visas and MasterCards of the world, which you also cover. Which do you see as being the more pressing issue that would move the whole evolution of the space?
You mean in terms of like disruption of the space, or in terms of more on the regulatory? Yeah, so I think actually this is a really interesting point you're saying. I think when it comes to payment, it's just something that I'm seeing in payments overall. I think there's like fear, for example, that Visa and MasterCard are going to get disintermediated by buy now, pay later, crypto, what have you. And I think what people don't understand is that the TAM, the total addressable market for these firms, is just so big. E-commerce is hundreds of trillions of dollars. Payments is moving from cash to card. That's like billions of dollars. So I think what's happening, there's this fear right now, just because there's a lot of, excitement around buy now, pay later. And we're very excited about that too. But that doesn't actually bite into the cake of the Visa and MasterCard. So there's going to be room for growth for both. And I actually think that those two names are probably, one of the most attractive ones, just because there's, fear that's unfounded. So I think that's kind of the message today, is that this is overblown. And I think that you'll see more growth coming out of these names than people expect in the coming years.
Yeah, certainly a lot of opportunity out there, Dan. But I think there were so many interesting messages from Gensler in the interview this morning. He said the SEC is short-staffed. They need to hire more people to do what they need to do. He reiterated on a number of different points the importance of transparency and disclosures. And he also compared Robinhood to DraftKings, saying that that's effectively, those investments, that day trading is effectively gambling. Looking at his approach broadly, how do you expect that to impact all of these different fintech companies?
Yeah, I think that, again, like the regulation, and hi, Julie, always great to be on the show, but I think the regulation is something that we've expected to come. And you will probably get, if in any news or any regulatory news, you will get sort of, a bit of a bump in the stock, but then obviously the users, or the demand for the users is so big that you'll get more users doing more services. So even like after the initial bump, it's going to be a buying opportunity, because I expect the revenues and the profits to keep going up. So unless you're going to get a complete shutdown, which I cannot, foresee. So I think it's a bump in the road at most, and then you'll see more growth coming down the road.
Big difference, Dan, between the different types of buy now, pay later companies that are out there and their models and viability?
I think that the big ones, the big trends that we're looking at and is the move towards lower ticket items. I think that's the place to be. And you're seeing that, for example, with the Amazon deal and Affirm. And that's where we're so, bullish on Affirm, or even like Square Afterpay. Lower ticket items, everyday spend. I think that's the place to be, not so much high ticket items, right? Because the frequency of use is bigger there. And I think that's the place to be. It's also lower risk, because you're not going to go, bankrupt if someone defaults on a pair of shoes, right? So I think that's the place to be, and that's where the successful companies are going towards.